Hi everyone, today we are going to talk about Aavas financials. Housing finance companies went through a challenging period in 2019 following the liquidity crisis triggered by the default of IL&FS group companies in September 2018. In such a challenging period, Aavas Finance's performance stood out. The stock was the best performing stock in the 2019 and it rose by 131% in a year's time. While raising equity capital of rupees 400 crore at the peak of the crisis did help the company to tide through the crisis, the biggest driver of the stock has clearly been the high earnings growth delivered by the company so far. So now let's look at the key business highlights. While the growth of the many housing finance companies has collapsed, Aavas's loan book at around 6,700 crore as it end September 2019 has grown at around 49% compounded annual growth rate over the last 2 years. Now this is commendable considering that fact that the overall sector is not doing well. The encouraging part about this growth is that it has been volume driven by increasing the customer base and this was possible mainly because of the deeper penetration into existing geographies by adding new branches. Along with the high growth, Aavas has also been able to improve its profitability with return on assets improving from around 2.8% in FY18 to around 4% in the first half of FY20. The improvement in ROA was mainly driven by the operating efficiencies along with the healthy net interest margins and contained credit cost. Affordable housing segment continues to be in a sweet spot primarily because of the focus by the government and Aavas presents an exciting investment opportunity primarily because it's a pure play affordable housing finance player. Despite the high growth, Aavas's loan book is still very small, that is 3% of the overall pie, and hence conservatively it can continue to grow its loan book about 25% over the next couple of years. A high loan growth along with the ROA of around of more than 3% will enable help the company deliver and sustain the high earnings growth over the next couple of years. So what's the outlook on the stock? At the current market price of rupees 1980, Aavas is trading at around 6.3 times FY21 estimated book value, which is premium to most housing finance companies on the street. Thanks to its staggering earnings growth, the stock has sharply re-rated in the last 1 year. We have seen that Group Finance, another housing finance company, delivered the return of in excess of 25% over 19 years from 2000 to 2019, and it traded at a stretched valuations for a longest possible period. Now, taking cue from Group Finance, we see that even Aavas financials can trade at a high multiple for a long period, and its premium valuations will sustain. However, the rich valuations is also one of the risk factor as it does not leave much room for the lender to falter on asset quality or on growth. With limited room for valuation re-rating to happen in the near term, the stock upside will be driven primarily by the earnings growth, and stock will move in tandem with the earnings growth. So the long-term investors should look for any price correction opportunity to buy into the stock. Thanks a lot. Thanks for watching.